Value trades, Forex, CFDs, and commodities.
Hey traders, it's Paul here on behalf of Value Trades, and today what I'm here to talk about is harmonic patterns, and in particular trading the butterfly pattern. So some of you may be aware of what a harmonic pattern is. It's a series of simple trading patterns that use Fibonacci ratios to be able to build a pattern that gives you an opportunity to identify some potential reversal zones. Within that, there's a couple of very specific ones. The one is a butterfly. Where does that come from around? Well, in the 1930s, a trader by the name of Gartley wrote a book about trading patterns, and on page 222, he described a particular pattern called the Gartley, which is a very well known, very well considered and useful trading pattern to understand. If you want to have a look at a particular sort of try to identify that, it's a classical sort of M top or W bottom pattern. So within that, the butterfly is a particular specific style of that, and the reason it's a particular one is because one of the legs is overextended compared to a Gartley pattern. So if you think of a butterfly, a pattern is effectively, it's got four legs. It's got the X to A leg, the A to B, B to C, and then the C to D. Okay, they normally have an X to A pattern is where we normally get, in this particular case for a bullish reversal would be effectively a sharp drop to the bottom. Then we get from A to B, which is normally up to about a 78.6% retracement. Then we get sort of the B to C, which can be between 38 to 88% retracement, and then we get the C to D leg. Okay, what makes the butterfly pattern specific is that the C to D leg is a 127 extension. Okay, it's a much longer leg, and it's at the end of that leg that we are identifying our trade, or where what you'll find harmonics traders will call the PRZ, the sort of potential reversal zone. It's in at that point that actually people will place their reversal trades. Those who are more let's say more intermediate traders, more advanced traders, they actually learn to be able to trade within those legs, in particular the sort of the BC and the CD itself. You actually have trades placed up before you actually hit the PRZ. But it's a very simple pattern. It looks like a classical sort of W bottom or a classical M top. It's a very useful pattern to know, and it gives you some great opportunities to identify simple sort of reversal opportunities. It just sometimes requires a little bit of patience to sit and wait for the actual pattern to play out. I hope that you find that useful. I wish you the best success in your own trading, and I'll speak to you soon. Thanks.